Thank you so much for joining us today. I'm sure you guys are really waiting to have the awards, to have the side events as we all do. But I really feel like we have the pleasure to discuss one of the most important topics. This first billion user mark has been floated around in crypto for way longer than I've been in the space, in 2017. And we will get into the catalysts and what's really driving adoption. But before we get into the protein of today's discussion, I'd just love to have a round of introductions. So starting with Zain, please let us know what got you into Web3, what you're currently building, and yeah, let's just go over to everyone after.
Sure. So I'm Zain. To introduce myself, I'm an OTC broker managing the European desk for OSL. And just to give you a bit of an introduction on OSL and what OSL is, we're an OTC house out of Asia. With that said, we're also an exchange. We provide custody solutions. We've recently launched our wealth management products as well. So we're looking to build an in-house, a go-to spot shop for everything crypto. So the future of banking could potentially be with a firm like us, similar to what Revolut is, and perhaps we're looking to enhance that further. And just to give you a bit about myself, I come from a pure banking background. So being State Street, Silicon Valley, and lots of private banking in the UK. So being a banker, I think the future was a case of, being a banker and having invested into Bitcoin since 2015, I think I've seen the phase and the growth where kind of you can kind of see the rise, and you've been a part of it. And then working at Silicon Valley Bank, and you're kind of looking after the likes of XRP or the likes of Coinbase and Binance and Circle, and manage them as clients, it gives you a lot of exposure, and you can kind of see where the future is. And of course, the future of payments, I think, is within digital assets, where, just to give you a bit more color on what Asia is doing right now, 61% of crypto users or crypto volume comes from Asia, and the rest is shared between Europe, UK, and America. And people don't tend to kind of grasp the fact that Asia is so huge and so big, from the point that OSL, from an ETF, digital assets ETF perspective, we house 71 to 73% of global ETFs, primarily out of Asia. So that's the current notion. And I think where we are right now, with 634 million users globally, which has now increased. I was just checking the facts a couple of days ago, and it's around 834 million users. So when we talk about how quickly this will happen to 1 billion users, I think we'll be there in the next 6 months or so.
That's something I definitely want to get into, but let's just throw it away to everyone else to get an introduction. It's something I definitely want to get back to talking about. Thanks a lot, Zain.
Everybody, I'm Thomas. I'm with Crypto.com. I'm GM for France, but also oversee our Web3 partnerships. I've been with the company for 4 years. I did partnerships for our NFT marketplace at first, then for our Chronos ecosystem at large. Now that we're accelerating in Europe and in France, particularly after obtaining the MiCA license and giving us a little bit more bandwidth to activate and partner with the different actors of the ecosystem in France, it's kind of paving the way to hopefully some growth and some meaningful partnerships. So pleasure to be here and having this panel with you guys.
My name is Roy. I am the General Manager for Western Europe at OKX. OKX is one of the globally leading exchanges that is quite proud to have obtained their MiCA license in January, which allows us now to grow within the EEA, the EU essentially. So that's what we are doing now.
Thank you. Hi everyone, I'm Andrea. I'm a core developer at Nexa, which is a cryptocurrency that has been launched in 2022. To make a long story short, we are trying to bring an electronic peer-to-peer cash to the world like it was supposed to be in 2008, and we have some bumpy road since then, but I have faith that we will manage to get there. Someone, maybe.
Hi everyone, I'm Karen, the CEO and co-founder of Doors Free. We are the leading Web3 consulting company in France. We have the pleasure to work with more than 50 clients that are more corporate brands and also crypto brands such as crypto.com that we are proud to help in their acceleration in France. We work on strategic consulting, tech development, and creativity. And this subject is really interesting as we work with many brands. The crypto mass adoption is really a point, and I'm happy to be there. Also represent women in Web3.
So we've already had a lot of insightful answers. Two things I love that we've already touched on is the MiCA regulations, which is something I want to get back to. And actually one stat that's really important that Zain touched on is that we are currently above 650 million cryptocurrency users. Now, why is this important? Just 10 years ago, in 2015, we were just 3 million. So it means we've seen an over 208-fold increase until now. And Zain, because you seem to be very passionate about the subject, as we all are, I'd like to throw it right back to you. It's a 200-fold increase. This is tremendous in 10 years. It's perhaps something we haven't even seen in any other industries, not even tech. Zain, what do you think drove this type of user migration? Why did we get to nearly 700 million?
I'm a believer, right? We are moving into the digital era. That's why traditional finance, coming from banking, I hate to say it, but it no longer works. T1 and T2, I mean, being an OTC trader, you constantly work with clients that are sending money or receiving money, and hence why OSL pays come into the mix. We want to leverage stablecoins as a payment method, and just to make it more instant and give clients the satisfaction of being able to receive your money same day. I mean, MasterCard and Visa, they both have been beaten by USDT. I think just about a week ago, Tether USDT crossed 250 billion mark, which is more than Visa and MasterCard combined. And these two giants tend to take up the global market share in payments in general. So stable coins as a payment method, something that we pride ourselves on, and we work with some major entities to facilitate that. So these are some of the reasons. And of course, institutional adoption is a key driver to this. And be it, BlackRock, JP Morgan, whether they tell you they like it or not, they're all kind of taking part in it.
I do find that really interesting, and this partaking from large asset managers is also curious. I've actually just wrote an article last week about BlackRock's ETF amassing 3.25% of the Bitcoin supply, and this is less than 1.5 years, so I think it really speaks to the type of adoption. So you're saying that it's essentially a sort of mismatch in the current banking system?
Absolutely. What we know, it no longer works. And hence why there is a need to move into more, just to give you a bit of context, for example, like the likes of McDonald's, a global entity, has offline terminals, because if they have an online terminal and they're receiving card payments on as the user transacts, they're being charged. So what they tend to do is they receive their lump sum payments every few months or every couple months, and they receive a chunk load and tend to get a better pricing. But with stable coins, as the user transacts, you're receiving those payments in your wallet straight away. So your accessibility becomes easier, and it's more seamless from the perspective of, you have what you own, and it's not sitting somewhere else within the bank.
That's a great point. I'll open this to the wider panel now. One interesting thing for me is that obviously we're seeing the underbanked side of the world really gain a lot of stablecoin adoption. However, in the other parts of the world where we're more, I guess, economically advantaged, I feel like it's more like the rising crypto valuations which may be driving the price. I'll throw this to whoever wants to take it next. What do you guys think? Is it the stablecoins right now? Is it payments? Is it the use cases? Or is it more of the growing crypto valuations that are driving adoption? I feel like, yeah, please.
Yeah, I think that in the part of the world where the economic, they are like less developed in terms of infrastructure, banks and stuff like that, is one of the special situation where cryptos could shine, because you don't need banks. The banks didn't want you in the first place. They don't want customers that are not, safe enough for them. So this is a place where crypto could, take the charge, and then make people able to transact with each other without third parties, and shielding them from taxation, which is inflation, which is a form of taxation, but giving people a way to exchange value, to protect themselves from inflations, from other kind of economic crisis. So I think that in that particular situation, in that particular kind of environment, the use case that will lead adoption, and it actually is doing it, like in Argentina rather than other places in South America, is like a payment system, like a way to defend your savings from depreciation and the ability to transact with each other without third parties involved.
Karen, I feel like you wanted to add something there.
Yeah. No, I'm totally agree. I think there are a lot of bank considerations, such as cross-border payments, stablecoins, and other ones. But I'm also convinced that the mass adoption will come from retail and everyday life. Like, for example, and as we work with many brands, I'm really convinced that if today and tomorrow we go to a football club, then we go to our supermarket, then we want to just buy something in a luxury brand, or we just want to take a coffee or stay at a hotel, if we can pay in crypto, and that become just normal without having any friction for the user, now we will win. And that's why I'm really convinced also of the power of exchange like crypto.com for sure, with the crypto pay, for example, because if it's become just normal, like in your user journey, in your life, then you have the mass adoption. I think that a lot of friction comes today for the mass, not for us because we are aware of this industry, for the mass because it's too complicated for them, like it's like, I have a wallet, I need to exchange some crypto, but if I have just a card and I just can pay in crypto and it's becoming euro or dollar, now it's really easy. So I'm convinced that brands have a powerful tool also to introduce crypto in the world and make it just easy as we have today for the other payments.
So I actually wanted to bounce back on what Karen has been saying, which is, I'm perfectly aligned with. But I think, as we were saying earlier, people have been adopting crypto because they're searching, independence from, centralized banks and just other entities. They want to be free to move their money around, free to invest, free to save, and have control of their wealth. And again, the mass adoption, as Karen was saying, is the more adoption we're going to see from merchants and just from brands and other commercial players out there, in terms of accepting crypto as a payment in everyday life. That I think will obviously, fuel the next big bump in user adoption and mainstreaming of the tech. But one thing to add here is that our company, for instance, we've started out as a card issuer where we were allowing people to pay using their crypto, for everyday expenses. So people out there are already paying with crypto, and we still see some resistance from merchants and brands who say, we don't really, our clients don't use crypto that much, so we want to stay on the safe side and work with banks. The reality is, the shift has already started, and there's already, a huge amount of people that are using their crypto not just as a speculative vehicle, but also just as a means of managing their wealth and spending their wealth. So yeah, it's for us, it's a clear path to mainstream adoption.
And can I just add one thing you said beautifully, was the fact that how many people tend to have a bank account? And this is something that I've kind of looked up. Majority of the world is still unbanked. I mean, Egypt being a use case, I think there was a strong figure. Over 50% of the Egyptian population is unbanked. But how many people have a phone? And that kind of really, it kind of eases things in the fact that it is constantly with you. You don't necessarily need to go and have a bank account or a case of, go through the due diligence process of a bank. It's a case of you set up a wallet, whether it's decentralized or with a company or an exchange, and you pretty much go ahead and transact. So giving the power to the users, to the people.
And I think that's a nice thought, right? Owning your own assets, being free to transact. But I think practically this is not really the case. I think that we right here today have a crowd that is following the vision and ideology for Satoshi Nakamoto. But can I see some hands in the crowd? If you please raise your hand if you pay more than 5% of your transactions actually with crypto today. You see, it's a minority, and I'm talking about 5% of your assets at a crypto event, right? So I don't think that people really are looking to pay. What people do like to do is save costs, for example. That could be a real use case. Right now, if you want to make a cross-border payment to another currency, it costs you for a $200 transaction, on average, about 6% transaction fees. That came out in the latest Blockworks report. This 6% can be immensely decreased to a sub 0.1% if you would use indeed blockchain technology and transact with stablecoins, apart from all the self-custody advantages and hedge against inflation. So I think that payments can be a real advantage for users, but it's more about saving cost and simplicity than it's about owning your own assets as of now.
That's definitely a great point, Roy. We've also discussed this on the show a lot, and I do feel like even though Bitcoin was introduced as this peer-to-peer cash system, I feel like its valuation is just making us not want to sell Bitcoin. Like, I'll be honest, I don't want to pay for my drink with a Bitcoin. I want to hodl my Bitcoin. So I think in some sense, Bitcoin's success and Bitcoin's parabolic rise is sort of what made it less of a spending currency. But one thing I want to follow up on, and I really want to throw this over to you, Roy, and to you, Thomas, because you've also partly talked about this. Merchant adoption is really important. Banking adoption is really important. And even though we are near 700 million users, I feel like there's a lot of hesitancy from some large financial institutions, even though, as Roy obviously mentioned, there's some clear benefits with transacting with stablecoins. It can save you a lot of money. It can save you a lot in cross-border transfers. So I'll just ask this. Why do you guys feel like financial institutions are kind of lagging behind? Of course, not everyone. We've seen Societe Generale, for instance, working on a stablecoin within the MiCA framework. And Societe Generale is, I think it's a top 20 banking group. But why is this larger hesitance? Thomas, Roy, who'd like to take this?
So looking at the current bull run, I wouldn't even say that institutional clients are lagging behind. Many would argue that this is actually more of an institution-driven price action that we have seen recently. But why was it that the previous bull run, it was inaccessible to the institutions? That is because most of the large financial firms and institutions and banks are bound to a certain rule set, right? They need clear regulation that fits with their own compliance departments, their own risk management. And right now, since last year, December, we had for the first time in the EU regulation for CUSPs, for centralized exchanges, for example. So right now we see more regulatory adoption, which makes it easier for institutions to tap into the opportunity. So I think that was maybe the slight lag behind, but I do think that they express serious interest and even drive the price action recently.
And just to add on top of that, I mean, that's a clear reality. You know, we've seen this news cycle being fueled by, you know, the emergence of ETFs and institutional, you know, banks and corporations starting to play the game, and you know, the regulations across several, you know, different areas. US leading the way, but also now in Europe, just warming up to crypto a little bit. That is, you know, pointing in a direction that is creating a safer, more trustworthy environment for corporations and, you know, retail users to follow. So yeah, no doubt about that, and the fact that this cycle was fueled by, you know, less resistance from the institutionals as we'd seen in the past.
May I add something on I'm sure that having institution banks and ETF, whatever, embracing crypto for whatever reason, like being just greediness or anything else. One thing that we have to take into account, though, is that on the use case of payments, there is an important thing, which is that in the fact that we can transact without intermediaries. I mean, if you were a Canadian like 2 or 3 years ago that were sustaining the protest that they made, the Canadian trackers, and got your bank account freezed or your credit card freezed because you donated $10 to the cause, to the protest, it would mean that you would not have a way to pay for grocery, for rent. Those kind of things would not happen if, like she said, everyone would pay for their grocery, for their rent, for their bills in crypto, because you don't have to ask for permission. This is the main thing. All the rest is, you know, better. It's you know, something more, it's okay, but the main thing is that I can transact something with you, exchanging value, without asking anyone permission for. This is the main thing. We need always to take into account the back of our mind. This is the keystone, in my opinion, of the entire environment.
And that's really an essential principle. And just for the people here who may not be transacting in DeFi protocol so much, there's a big difference. When you send a banking transaction, it says the transaction is approved. But when you do that with the Bitcoin transaction, it says it's confirmed, which is really important, which is what you've touched on. Nobody needs to approve it. Nobody can censor you just because you supported a cause or an ideology. So it's certainly very important. Sorry if I took the spotlight there, Karen.
No, just to open the debate, I think, and Zane, you said that also crypto adoption depends on geography. Like really, we have worked, for example, with the Ministry of Finance in Morocco, and 40% of the population has no bank account. So for them, it's like a real issue. They use cash in mass, but they don't have any reason to don't use cash. So now they are wondering, like, okay, if we use, for example, a citizen wallet or crypto, like, do they want to use it? We don't know. So I think that geography is really interesting when we talk about crypto, because like Africa, Latin America, Europe is not really the same. For example, for us, we can be honest, in France, crypto is a luxury. Like, I'm crypto enthusiast, but we don't need it for now. Like, we have bank, we have everything we want. So for a lot of people, and where we work with brands and corporates, they are like, why do I use crypto? And you know, you are like, yeah, you have to use it for cross-border, for that one. Yes, but now it's okay. So I think there is geography. And then there is also the use case. We were talking about financial use case. For sure, there are a lot of financial use case regarding stablecoins, cross-border, regarding also treasury company. Like I think for a lot of B2B company, it's really interesting. But for the other people, like everyone here, the use cases are really different, and it depends also on the life we have, if we want to invest, if we want to make trading. So that's what is really interesting with crypto, but also really difficult when we go in these markets, because the first question is like, why do I use crypto, and for what reason, and for what results? Because lots of people are like, okay, I want to use crypto, but what the result for me? Like, do I have more tax or not? Like, is it interesting to pay or not? For example, in France, you have a lot of tax, you know. If you pay with a credit card in crypto, you have tax. So it depends. Like, do you want to have tax in your tax office or just in your card? So it really depends on people and use case. And that's where we have, I think, to work a lot on user experience, to work a lot on the value proposition. Because for now, for a lot of people, crypto, such as a lot of technology before, is seen as a niche. But we are convinced that tomorrow it will not be a niche. And if we want to make mass adoption such as AI today, we have to put it in the back and to have results in front.
And can I just add, Karen, to what you just said? So geographies are key, right? From my personal experience, I worked with lots of banks, as well as clients that come from Africa or LATAM. And one of the key issues that ones face in West Africa, for example, XOF, XAF currencies, other currencies such as NGN, Nigerian Naira, and others, they're not heavily supported by banks. And with that said, what does a user do when your currency is just not, your bank doesn't support your, so if, for example, remittances, if you're sending money back home, or you've got family elsewhere and you're looking to make a payment, and Africa, to say in that case, I've had that first-hand experience where banks just don't have the ability or the correspondent network to be able to send payments to certain parts of Africa. And I think that's where the perfect use case for the local guys is to use USDT, stable coins, and they do. And hence why it's a 40% year-on-year growth in those regions.
I think the Asian growth is especially impressive, and it does show that there's a true lack of banking infrastructure. Sorry, Karen, was there anything you wanted to add?
No, I just want to add the last thing, because like for years we are in the crypto industry, and also the thing is like crypto is about trust as well. And today, as we see in the geopolitical area, like it's really difficult in all the world. And I think that trust is really important, and we have also to work on it. We were discussing about traditional bank, like we think what we want on traditional bank, but trust is really important. And I think that it's the role also of exchange, of DeFi and other one to make, like to keep this trust. That is the philosophy of blockchain at the beginning. And I think that we don't talk anymore about it now, but it was the entry point.
I think that's very important, and I feel like this conversation is naturally segueing to one thing I really wanted to ask all of you, which is the biggest challenges which comes to adoption. To me personally, I feel like the industry took a significant hit with the Bybit hack, where we've seen the largest crypto hack in history, which wiped out 1.4 billion worth of assets from the exchange. What's really noteworthy, however, is that the exchange's reserves were back at normal just 10 days after. So for me, even though it may have been a hit in trust, it does show that today's exchanges are equipped to handle these issues. They are equipped to handle these large-scale attacks. But Karen, perhaps I'll throw it to you first. If you were to name, you said previously that we need better user experience. Would you say that that's the biggest issue right now, or it's a different challenge for mass adoption?
Yeah, I think for mass adoption, user experience is key. Like once again, we have to be frictionless as maximum. And it's the same for every technology, and it's the same for traditional bank as well. Remember when it was the beginning of the digital payment, for example, I think user experience is key. And once again, we have to put the technology in back. We are convinced on the technology, we love it, but mass people don't like it. So we have to be frictionless as maximum, have the best user experience, and the value proposition for the user. Like, why do I use crypto? Because it's better to use other money.
Yeah, actually, that's where I wanted to add something. On top of just, fluidifying the user experience, I think where we're really going to see, the fuel for more adoption in the future is by, continuing to innovate and building and, coming up with the applications that are going to drive, the adoption. Like there's already a handful of very tangible applications. People have used Bitcoin for a while now as a store of value. People are using a centralized exchange or crypto payment cards, for the perks, the cashbacks, and all the, the incentives that you get. You can do a lot of things with loyalty and just, identifying your customers and giving back to them. There's, I think, a ton of other use cases that are, we're just scratching the surface for right now. Tokenization and authentication of real-world assets is a massive one. I think we're only very narrowly opened the door for ticketing and those types of applications. But once that one is cracked, and the incumbents that have been securing their business and their revenues kind of, see and see the potential for blockchain technology, will have a lot more reasons for people to onboard. And those are just, I think, marginal use cases in comparison to what is yet to come. The internet started, 30 or 40 years ago, and it took a while for everything to stack up. And I think the moment where everything crystallized was when mobile, erupted, in the sense where everybody now has a computer in their pocket. Computer in your pocket plus internet everywhere kind of opens the door to, a whole new world of, services, applications, and innovation. I think that moment where everything will gel with blockchain technology and crypto in general is, not too far away. So just opening it up a bit here to, what we think is going to come next.
I totally agree with you, what you said. So again, being a banker, working with clients on fixed deposits and returns and interest rates. Now what we have is, if you hold your crypto for a certain period of time at an exchange, they give you airdrops. In other words, it's a yield product. They give you some sort of a return. And I think what a bank, typical. If you've got a fixed deposit account with a bank, in comparison to having crypto held at an exchange for a fixed period. I mean, getting 8% or 10% is a lot better than getting 0.05 or 0.2%. So that from that perspective, I think it's just giving the power to the people. One of the key things I wanted to highlight was, and it's kind of going with the fact that crypto does give power to the people, simply because of the fact that IPOs, major banks introduce new companies, and all of these mergers and acquisitions, giving access to the wealthy or the people that already have the power, people that have a lot of capital. And with that said, since crypto came into play, it kind of gave power back to the people, where people had the opportunity to get into get an allocation into one of the top performing crypto projects right now, ICOs, IDOs, and all sorts of stuff. And I think the likes of NFTs and these type of things, they kind of coincide to what is yet to come, because real estate in a form of NFT on the blockchain, and then of course you have I kind of lost it, but NFT, for example, a baby's born, and an NFT is issued in the form of a birth certificate, and that's pretty much forever available on the chain, and could be shared with the counterparties that you want to disclose your information to. So amazing in that perspective.
That's a really strong use case, especially for documents you don't want lost in a catastrophe, in a house fire. The blockchain ledger really should be home to a lot more than simply financial assets. And I think you've mentioned as well that we're starting to tokenize more and more assets, which could make for a wider foundation. Andrea, was there something you wanted to add?
As a challenge for crypto, for sure, usability will be one, but you can see it like not as a distinct part from the technology. In my opinion, usability and technology goes hand in hand. They are not separated. So it has to be easy for everyone to use. But more importantly, scalability. We need to be able to fulfill 8 billion people. We are not there unless we use existing infrastructure. And this is why projects like Nexa invest time, energy, and money trying to achieve that kind of throughput without the unnecessary condition to be, in partnership with banks, with other entities that come from, the traditional financing sector. So yes, scalability and usability. We have to have the ability to provide to 8 billion people without the permission of anybody.
Yes, exactly. And it was mentioned a few times that trust is very important for the industry, but it sort of goes against the ethos of the whole industry as well. So I would strongly recommend everyone to distrust like centralized entities by default, and then do your own research to mitigate your risks. And how could you do that? Well, for example, with centralized exchanges, you can look into the local licenses that the exchange has. Proof of reserves, are those transparent? Is the code written in a good way? And try to verify if they can earn parts of your trust, or at least the acceptable risk that you are willing to take. Is it not sufficient? Go for self-custody. But that's more for the advanced users. But I think it's very important to be informed and start from a position of distrust, because I believe that the industry hasn't shown to be super trustworthy for centralized entities at all times. But we are trying to counter that with many measures, right? ISO certifications for security, GDPR compliance for privacy, MiCA regulation for consumer protection, market abuse, etc. But look into those things and see if that's a risk that you're willing to take. And otherwise, use blockchain technology and self-custody to stay in a trustless ecosystem.
That's a very strong point, especially on the proof of reserves. For the listeners who may not be aware of this, proof of reserves is something that I believe it's mainly the FTX debacle which really inspired, and some other downfalls. But to me, what's really important here is that finally we are having exchanges transparently share all the assets they are holding, which is something we can't ever require from banks or other financial infrastructures. So for me personally, I feel like whenever we have this major Black Swan event, we kind of renew, we come back stronger, and we come back with stronger measures. And as much as I'd love to continue this discussion, we are approaching the last few minutes, and I really want to get everybody's thoughts on this. And Zain, I would love to start with you. I'll just ask the big question. when's the first billion users? And just to caveat that, there's a lot of analysts, for instance, Willy Woo, which I'm sure most of you are familiar with. He did initially predict that we would reach the first billion users. I believe it was in 2025, right? Which is obviously, it sounded ambitious back then. It sounded even more ambitious that Bitcoin could reach an ultimate price of 700,000, which doesn't seem any more impossible because we're above the 100K mark. So I'll just throw it over to you guys. Do you guys think we could reach the first billion, considering that we're at 750 million at last year's end? Could we see 1 billion this year? Is it in the next 5 years? Is it the next decade?
Zoltan, I actually think we're fast approaching that billion user. The crypto market's at 3 trillion market cap, and I think a year or two ago it was at 1 trillion. So from that perspective, we're growing at a rapid pace. I think I call it the digital pace, because it's no longer TradFi, it's no longer centralized, and it's a case of, I mean, just to kind of say that OSL, I mean, just going back a little bit, OSL, after the FTX and all, you know, it's the only exchange that, or should I say the only company listed on the Hong Kong Stock Exchange offering a $1 billion in insurance in case of any FTX-related similar events. So from that perspective, I think it's giving the users the confidence that in case anything does go wrong, there is some sort of, you know, some sort of safety net, simply because from an FCA perspective in the UK, if you lose 100,000, only 85K is covered. So that, on top of that, you take the little loss. But from a perspective of giving users the ground of trust and knowing that your assets are secure, and in the case of any events, there is going to be coverage. I think that's what's key. And what OSL Pay is doing in Europe and globally is exactly that, being able to give clients and retail users the ability to use crypto from an on and off ramp perspective.
Yeah. So just to jump back to the question around, when are we going to reach the next billion users? I'll go even a tiny bit further. I can't tell you exactly when we'll reach that, but my perspective is that we're, about one growth cycle away from full mainstream adoption. So I'm not talking about 1 billion users. I'm talking about 5 billion users. When do we think, people will be using crypto as ubiquitously as people are using credit and payment cards today? And I think, again, one cycle away, meaning, we have maybe a few years of growth and another, a down cycle, and then the next big cycle. I think within 10 years we'll reach 5 billion users. Pretty convinced of that. So hopefully 1 billion by, the next 3, and before the end of the next cycle, we'd be at 5.
I think getting to 1 billion can happen in one of two ways, which is one, speculation, price speculation that drives huge retail interest. We've seen that in 2021, where the market more than quadrupled in a span of a few months due to retail speculation and investors. The second option would be through actual usage of blockchain technology, right? Payments, for example, but the changes there require consumer behavior changes as well, and those tend to take a bit longer. Think about how we all use our phones to pay in supermarkets. It took a few years for the technology to be adopted. So I think it can be either speculation or usability, but at OKX we're trying to innovate and build in the direction that could accommodate both of those options.
I agree. I'm not good at making prophecies, so I won't make a firm statement, but I think that we need, as an environment, as a group of people that are committed to cryptos, to take into account what are the base values, why we are there, why we get there in the first place, which is trustlessness, which is disentangling from third parties, economic autonomy, banking the unbanked. If we keep those firm bases, and then we can achieve, a lot. The timing it's like timing the market. It's very difficult, and it's a prophecy, but I'm pretty sure that we will get there sooner rather than later.
Okay, so nobody gives a date. So yeah, I think it's really difficult to say a month or a year, but I think that we enter a sort of crypto revival a few months ago. Now we are in a new cycle, and I think that yes, in the 2 years to come, we will see really a mass adoption. And I think that there are like three accelerators. The first is financial institutions. Like we see a strong momentum actually with a lot of banks, and I think that it's a good signal for the mass adoption. The second one is retail and merchant, and I think we are at the beginning, so we need to accelerate this and to make user experience really easy. And the last one is really like what we can't program now is like political, geopolitical. If you take the case of Trump, I don't know if we will have another Trump in the world, but when you have like a political that say crypto is the money, for example, it's accelerating. So I think that we don't, we can't see now where we will have the billion user, but I think it's like in the 2 or 3 years now.
I certainly appreciate that perspective. And just to close the loop, I personally think that we were going to reach the first billion either at the end of this year or in the first half of next year. Now, there's two reasons I think that. One is because retail is really not here in this cycle. Most of this cycle has been driven by institutions. Retail participation is very, very low. And the second reason I think that is because Bitcoin just turned 16 this year. And if you look at the S-curve adoption of the internet, it's the first 15 years where it was really slow. And after 15 years, it really exploded into mainstream. Now, you could argue that Bitcoin may not follow that track, but I see it very much as a decentralized network, not just as a currency. So yeah, I'm looking forward to WAIB Summit next year. I do think we will have the first billion users then, and if not, I really hope you will be here to say I was wrong. Thanks a lot to our great panelists. Thanks so much for being here, and please make sure to keep up with the ceremony award.